Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In this video, I'm going to analyze Nvidia stock. I will explain why DeepSeek lied about its training cost, which has caused Nvidia stock to dip a lot recently. DeepSeek's total training cost is actually much higher than the company initially claimed. I will explain why Nvidia stock is likely undervalued now. Just to give you more context first, recently, just before I started making this video, Nvidia's market cap had dropped by as much as 600 billion because of fear, uncertainty, and doubt surrounding DeepSeek. According to DeepSeek, the Chinese AI company has only spent around 5.6 million to train its latest open source V3 large language model or LLM with only around 2,000 Nvidia Hopper GPUs. More importantly, DeepSeek's R1 reasoning model is comparable to OpenAI's latest reasoning model, but the training cost is many times cheaper. In comparison, the leading US AI companies such as OpenAI, Meta, Google, Anthropic, and xAI have spent hundreds of millions or even billions to build their frontier AI models. So investors are very concerned that the US hyperscalers and AI companies have been overspending on AI infrastructure. The market is concerned that the US hyperscalers may decrease their AI spending going forward if they can build much more cost-efficient frontier AI models like DeepSeek that will require fewer AI accelerators for AI training and inferencing. This is why Nvidia stock has dipped a lot recently. The important question is whether DeepSeek's claim about its training cost is true. Here's the situation right now. The market did not understand DeepSeek's total training cost. DeepSeek's total training cost is much higher than the company's initial statement of 5.6 million because that figure only represented pre-training costs. There are many other costs such as R&D, researching and testing many AI models before training them, processing data, creating synthetic data for post-training, other post-training costs, and AI inferencing costs. The actual total training cost is much higher than $1 billion. More on this later. So in this video, I'm going to explain why the DeepSeek fear is overblown. More importantly, I will explain why I believe Nvidia stock is likely undervalued now. In this video, you will learn about the following topics. First, I'll give you a quick stock portfolio update. Then I will discuss why DeepSeek's total training cost is much higher than initially claimed, whether AI CAPEX will decline, Nvidia stock valuation, and whether I plan to buy more Nvidia stock going forward. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing and analysis videos a week that will help you become a great investor. Each video usually takes me more than 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing in for the long term, follow my personal stock portfolios, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a company becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Before talking about Nvidia stock, I would like to talk about two macro headwinds that will likely impact the market the most this year. At the time of making this video, the market is still fearful mainly because of these two headwinds. First, the US Fed will likely hold higher rates for longer and have fewer rate cuts than expected this year because the US inflation seems to be stickier than expected. However, once the US PCE inflation starts to drop to the 2% target again, the US Fed will eventually cut rates again. This means the market will eventually recover. Second, right before I started making this video, President Donald Trump decided to wage a trade war against Canada, Mexico, and China because he wanted to reduce the US trade deficits. Of course, this trade war is still ongoing. These tariffs and trade policies will change over time. However, the market is concerned that higher tariffs will lead to higher inflation in the US. Based on my experience investing for many years, Donald Trump's trade wars and tariffs against other countries are not new at all. He waged a trade war and imposed higher tariffs on China during his first term, so I'm not worried about Trump's higher tariffs and trade policies. the market will eventually recover and reach new highs again. Let me show you this portfolio. The purpose is to show you my investing strategy over time. This portfolio is separated into 3 different accounts. This is the first account. Recently, I bought more Nvidia stock during the large dip caused by DeepSeek. I decided to buy more Nvidia stock because I believe the market misunderstood DeepSeek. I believe Nvidia is undervalued again. This account has been performing very well compared to the S&P 500 because I've been investing in the best companies that are most competitive and most profitable in their industries. For example, I have invested in MasterCard, Microsoft, Visa, Amazon, TSMC, Google, Meta, and ASML. My investing strategy is to keep investing in the best companies and buying them only when they're undervalued. Then I like to buy and hold them for the long term so they can grow exponentially over time. This is the second account. The investing strategy is the same as the first account. I have invested in Apple, Visa, Google, TSMC, Microsoft, Nvidia, and Amazon. These companies are the best in their industries. Recently, I sold more Apple shares because I needed more cash to invest in Nvidia, Google, and Microsoft. I believe Nvidia, Google, and Microsoft are much more undervalued than Apple. I've sold Apple many times before and used the gains to buy other stocks such as Amazon, Nvidia, Google, and Microsoft. If I include all the realized gains from Apple, my total gain from Apple is around $140,000. I only invested about $10,000 in Apple over the years. However, I am planning to buy back a lot more Apple shares once Apple becomes undervalued again. This is the third account. This account is newer than the 2 other accounts, so it will take slightly longer for these companies to become multi-bagger stocks. I have invested in Meta, TSMC, Amazon, Visa, Google, Nvidia, Microsoft, Broadcom, ASML, and AMD. This account is too diversified, so I've been rebalancing this account by selling stocks, taking their gains, and consolidating investments in the top companies I like the most. For example, I already sold Mercado Libre, ServiceNow, Adobe, Uber, Intrinsic Inc., and Synopsys shares recently. I bought them when they were much more undervalued before. Then I took their gains and bought back Broadcom stock. I also bought more Nvidia stock recently because I believe it's undervalued. I will consolidate this account more and concentrate on the top companies instead of over-diversifying. Let's go back to DeepSeek. I will explain why the DeepSeek fear is overblown. As I mentioned earlier, DeepSeek claimed that the company only spent around $5.6 million or $6 million if you round it up to train its V3 AI model. Of course, the market overreacted and misunderstood DeepSeek because the Chinese AI company did not disclose its total training cost and how many Nvidia AI GPUs it has owned over the years. In fact, if you research enough, you will discover that 5.6 million or 6 million was only a portion of the total training cost. Specifically, it was the GPU time that was required for pre-training DeepSeek's V3 AI model. 5.6 million did not include the amount of money that was spent on research and development prior to training the AI model, model testing and refining, data processing, the overall infrastructure spending over the course of several years, post-training, AI inferencing, and the cost to buy AI GPUs from Nvidia since the company's inception. If we add the total training cost, which includes pre-training and post-training, the cost of AI inferencing, the cost of owning and operating Nvidia AI GPUs, you will realize that DeepSeek has likely spent $1.6 billion or more on AI infrastructure over the years. In reality, 5.6 million was only a portion of the total training cost. Specifically, it was the pre-training cost for one specific LLM called the V3 model. Semi-Analysis wrote this outstanding article. They explained that DeepSeek has spent more than 1.6 billion on AI infrastructure over the years. The narrative now is that DeepSeek is so efficient that we don't need more compute, and everything has now massive overcapacity because of the model change. Wow, Jevons paradox too is overhyped. Jevons is closer to reality. The models have already induced demand with tangible effects to H100 and H200 pricing. This means Nvidia's H100 and H200's pricing have increased recently because DeepSeek has led to even higher AI demand. DeepSeek claimed that it used 2048 Nvidia H800 GPUs to train its V3 AI model. This is misleading. Here's why. According to semi-analysis, DeepSeek's parent company, Highflyer, had been buying thousands of Nvidia AI GPUs before the US started restricting China from buying the most advanced AI GPUs from Nvidia. For example, over the past several years, DeepSeek has bought thousands of Nvidia A100, H800, H20, and even the H100 AI GPUs, most likely through third-party companies that are outside of the US. Of course, DeepSeek cannot admit to owning thousands of Nvidia H100 AI GPUs and other AI GPUs because these high-end AI GPUs are sanctioned by the US. Chinese companies are not supposed to have access to these high-end AI GPUs. DeepSeek's $5.6 million training cost is misleading because it is only the pre-training cost to train the V3 model. It's not DeepSeek's total training cost and total AI infrastructure cost. We have to look at DeepSeek's total AI infrastructure cost, or total cost of ownership, TCO, on AI infrastructure over the years. According to semi-analysis, DeepSeek has around 60,000 Nvidia AI GPUs, including the A100, H20, H800, and H100 GPUs. In comparison, DeepSeek claimed that they only use around 2,000 Nvidia H800 to train its V3 model. But in reality, DeepSeek has access to many more Nvidia AI GPUs. Based on Nvidia's average selling price per GPU, each AI GPU can cost around $13,500 to $23,000. If we add all the GPUs over 4 years, the total server CAPEX would be around $1.6 billion. Moreover, we need to account for the cost of operating these AI servers over 4 years, which would be around $944 million. So the total cost of ownership and operating these AI servers would be approximately $2.6 billion over 4 years. It's not possible to build a frontier AI model with only $5.6 million or $6 million if you round it up. According to semi-analysis, DeepSeek's price and efficiencies caused the frenzy this week, with the main headline being the $6 million figure training cost of DeepSeek V3. This is wrong. This is akin to pointing to a specific part of a bill of materials for a product and attributing it as the entire cost. The pre-training cost is a very narrow portion of the total cost. We believe the pre-training number is nowhere the actual amount spent on the model. We're confident the hardware spend is well higher than $500 million over the company's history. To develop new architecture innovations during the model development, there's a considerable spend on testing new ideas, new architecture ideas, and applications. Multi-head latent attention, a key innovation of DeepSeek, took several months to develop and cost a whole team of man-hours and GPU hours. The $6 million cost in the paper is attributed to just the GPU cost of the pre-training run, which is only a portion of the total cost of the model. Excluded are important pieces of the puzzle like R&D and total cost of ownership or TCO of the hardware itself. For reference, Claude 3.5 Sonnet cost tens of millions to train, and if that was the total cost and Anthropic needed, then they would not raise billions from Google and tens of billions from Amazon. It's because they have to experiment, come up with new architectures, gather and clean data, pay employees, and much more. Many investors do not know this. The cost of training and inference for AI models continues to decrease substantially every year. Let's say it costs $10 million to train a large language model or LLM. It would cost much less to train the same LLM a few months later. For example, according to Dario Amodei, CEO of Anthropic, he said, Claude 3.5 Sonnet is a mid-sized model that costs a few $10 million to train. Sonnet's training was conducted 9 to 12 months ago, and DeepSeek's model was trained in November or December. Of course, it's much cheaper to train a similar model many months later because the cost of training and inferencing LLMs continues to decrease significantly every year. Scale AI CEO Alexander Wang said the same thing about DeepSeek. This matched semi-analysis article about DeepSeek.
The Chinese labs, they have more H100s than people think.
And these are the highest powered Nvidia chips that they were not supposed to have.
Yes. My understanding is that DeepSeek has about 50,000 H100s, which they can't talk about, obviously, because it is against the export controls that the United States has put in place. And I think it is true that, I think they have more chips than other people expect, but also on a go-forward basis, they are going to be limited by the chip controls and the export controls that we have in place.
Based on what I know, one of the best ways to reduce AI training costs is to use a much larger AI model's output to train a smaller AI model so that the smaller model can distill knowledge and data from the larger model, achieve very similar performance and reasoning capabilities as the larger model, and have much lower training costs. This is called knowledge distillation or the teacher-student model. According to Financial Times, OpenAI has evidence showing that DeepSeek has been using ChatGPT's output to train DeepSeek's AI models. This is why DeepSeek's training cost is much lower than that of OpenAI. Let's consider this. DeepSeek is a huge breakthrough because the model is much more cost efficient than other US AI models. DeepSeek's training cost seems to be much lower than expected. DeepSeek likely used ChatGPT to train its AI models to lower training costs much more. Moreover, DeepSeek has introduced a major innovation called multi-head latent attention (MLA), which has significantly reduced inference costs. In reality, DeepSeek still needed to invest hundreds of millions of dollars in AI infrastructure to build its latest LLMs, such as the V3 and R1 models. $5.6 million was only the pre-training cost. Post-training and AI inferencing can cost hundreds of millions of dollars. Looking at DeepSeek's pre-training cost for one model is not accurate at all. We have to look at DeepSeek's total spending on AI infrastructure over the years, which is likely well over $1 billion. DeepSeek is currently capacity constrained. Based on what I know, the company does not have enough AI GPUs for inference workloads. There are too many users using DeepSeek now. This is why DeepSeek's server is often very slow. This shows that 5.6 million is not enough to build a frontier AI model that can serve millions of users around the world. Here is the important question you should ask if you are investing in Nvidia or other AI semiconductor companies. Will AI CAPEX decrease because of DeepSeek and much more cost-efficient AI models? My answer is no. AI CAPEX will not decrease at all. Here's why. AI CAPEX will continue to increase much more over time because whenever the cost of computing decreases substantially over time, people will find many more use cases. Just like any other technological breakthrough, AI will become much more accessible and cheaper for everyone. As a result, the overall market will become much larger over time. Most investors do not know this. Reducing the cost of computing, especially in AI applications, has been Nvidia's most important goal over the past 10 years. Nvidia wants to make AI much cheaper and more accessible for everyone so that the AI market will grow much larger over time. Jensen Huang said this during a recent interview.
Now, one of the things that you said earlier that I really appreciate is that in the last 10 years, we increased the performance by 1 million times. What have we really done? What Nvidia has contributed is that we've taken the marginal cost of computing and we reduced it by 1 million times. Imagine if there's something in the world that you rely on. It could be electricity. It could be airline ticket. It could be anything you choose. We reduced it in the last 10 years by 1 million times. Well, when something happens, when the cost of something reduces by 1 million times, your habits fundamentally change. Absolutely. How you think about computing fundamentally changed. That is the single greatest contribution NVIDIA ever made. That we made it so that using a machine to go learn exhaustively an enormous amount of data is something that researchers wouldn't even think twice to do. That's why machine learning has taken off.
The market does not understand the Jevons paradox and why it applies to AI. The Jevons paradox states that increased efficiency in the use of a resource leads to increased demand for that resource. This is because the lower cost of using a resource leads to more people using it. Whenever there's a huge technological breakthrough, such as personal computers, the internet, cloud computing, mobile computing, AI, and eventually AGI, the initial cost is always very high. As a result, very few people can afford to use it. However, whenever the cost decreases substantially, the market becomes much larger and more profitable over time. Because more people can use it, the demand is much higher, people can find many more use cases, and companies can earn much higher returns on investments, or ROIs over time. Of course, when the market gets larger and companies earn higher ROIs, they will reinvest any efficiency gains and increase their investments. This applies to AI. This is my prediction. I believe DeepSeek is ChatGPT 2.0 because it shows that the cost of computing and training AI models has decreased substantially over the past 2 years. This has made AI more accessible and cheaper for everyone. DeepSeek has encouraged AI companies and AI labs to make much more cost-efficient AI models. Now, even smaller AI companies can potentially make AI models that can compete with the much larger AI companies. Here's the important part you know. Both the US and China are not going to slow down their AI spending because they are in an AI arms race that will last for many years. They will continue increasing their spending on AI for many years because of national security concerns. The US and China are competing to become the dominant leader in AI, advanced chip manufacturing, and advanced chip design, so it will not make sense for their AI companies and big techs to slow down their AI spending. All the major US big techs and Chinese AI companies are racing to develop the next frontier AI models. Whoever develops the next frontier AI model first will likely dominate and disrupt many industries. For example, all the US big tech companies are racing to build artificial general intelligence, AGI. According to OpenAI, there are 5 levels of AGI. At the time of making this video, the leading LLMs such as OpenAI O1, DeepSeek R1, and Google Gemini 2.0 are considered level 2 reasoning AI models. Level 3 will be AI agents. AI agents can help us do tasks almost autonomously once we prompt them or give them a command. Level 4 AIs will be able to innovate just like humans. Level 5 AIs will be able to manage organization functions and projects. Starting this year, we will have many AI agents for large enterprises. Over the next 10 years, we will have many consumer AI agents and AI apps that can run on our smartphones and PCs and help us do tasks almost autonomously. For example, Tesla's upcoming unsupervised full self-driving FSD and the Optimus humanoid bots are essentially AI agents that can help us do tasks almost autonomously once we prompt them. This from Nvidia, it shows that the cost of generating each token has decreased substantially over the past 10 years. LLM energy efficiency has improved around 100,000 times over the past 10 years. Here's the important part you should know. During the same period, AI CAPEX did not slow down at all, even though LLM energy efficiency has improved substantially. In fact, AI CAPEX has increased significantly, especially over the past several years, from 2022 to now. This matched the Jevons paradox I talked about earlier. For example, the Kepler GPU uses around 42,000 joules to generate one token. The last gen Hopper GPU from 2022 uses around 10 joules to generate one token. In comparison, the current gen Blackwell GPU is expected to use around 0.4 joules to generate one token. I believe this huge improvement in energy efficiency will make AIs much cheaper and more accessible for everyone. I've said this many times before, Nvidia has a near monopoly in the AI server market. Nvidia has over 90% of the AI server market because it has the best AI supercomputers, the best AI software stack, the best AI ecosystem, and the most developers and companies supporting its accelerated computing platform. To stay ahead of competitors, Nvidia will continue releasing new AI systems that will be more performant, more scalable, and more energy efficient. For example, Nvidia will release the Blackwell Ultra platform in the second half of 2025, the Rubin platform in 2026, and the Rubin Ultra platform in 2027. I said this in my previous videos. I said that no one wants Intel's AI GPUs, no matter how cheap they are, because Intel is well behind Nvidia in both rack-scale AI systems and AI software stack. Interestingly, right before I started making this video, Intel announced that they had cancelled their next-gen AI GPU because they wanted to focus on rack-scale AI systems like Nvidia. AMD has been outperforming Intel in the data center market and gaining significant market share from Intel. However, AMD did not meet AI revenue expectations in the most recent quarter. More importantly, AMD has not provided guidance on its AI revenue for this year. This shows that most hyperscalers are still planning to invest in Nvidia's AI systems instead of AMD and Intel. I will make a separate video about AMD later on. Let's take a look at Meta, Google, Microsoft, and Amazon's expected CAPEX in 2025. If they increase their CAPEX, Nvidia will likely earn much higher values because a large amount of their CAPEX is going into AI infrastructure. According to Yahoo Finance, Meta, Google, Microsoft, and Amazon will have a combined CAPEX of approximately $325 billion in 2025. This is 45% higher than their combined CAPEX of $223 billion in 2024. This means Nvidia will earn much higher values from Meta, Google, Microsoft, and Amazon this year. Of course, investors are concerned that the big techs are overspending on AI infrastructure. Many investors do not understand that the big techs are in an AI arms race. The US big techs are spending a lot of money on AI infrastructure because they do not want to be left behind. They're competing with each other to develop the next frontier AI model and eventually AGI. The US big techs are also competing with the Chinese AI companies. The US big techs are increasing their investments in AI infrastructure because they are using AIs internally to improve their products and services. Microsoft, Google, and Amazon are earning values from AI by renting out their GPUs to their customers who are building AI models and AI applications. They are also earning values from AI by serving inference tokens to customers. Interestingly, Google, Microsoft, and Amazon have said the same thing about their cloud businesses. They are currently capacity constrained. They do not have enough GPU capacity and power to meet AI demand. Their cloud businesses would grow faster if they were not capacity constrained. This is why they are significantly increasing their AI CAPEX this year and very likely next year to meet customer demand. Andy Jassy, CEO of Amazon, said this in a recent earnings call.
On the CAPEX side, as Brian mentioned earlier, we spent $26.3 billion in CAPEX in Q4, and I think that is reasonably representative of what you can expect in an annualized CAPEX rate in 2025. The vast majority of that CAPEX spend is on AI for AWS. It's, the way the AWS business works and the way the cash cycle works is that the faster we grow, the more CAPEX we end up spending because we have to procure data center and hardware and chips and networking gear ahead of when we're able to monetize it. We don't procure it unless we see significant signals of demand. And so when AWS is expanding its CAPEX, particularly in what we think is one of these once-in-a-lifetime type of business opportunities like AI represents, I think it's actually quite a good sign, medium to long term, for the AWS business. And I actually think that spending this capital to pursue this opportunity, which, from our perspective, we think virtually every application that we know of today is going to be reinvented with AI inside of it and with inference being a core building block, just like compute and storage and database. If you believe that, plus that altogether new experiences that we've only dreamed about are going to actually be available to us with AI, AI represents for sure the biggest opportunity since cloud and probably the biggest technology shift and opportunity in business since the internet. And so I think that both our business, our customers, and shareholders will be happy medium to long term that we're pursuing the capital opportunity and the business opportunity in AI.
This is from Tesla's most recent earnings call. Elon Musk explained that Tesla's upcoming humanoid bot will likely require a much larger AI training cluster, at least 10 times larger than Tesla's current AI training cluster. This will benefit Nvidia a lot because Tesla will need to buy a lot more AI systems from Nvidia over the next several years.
We launched the Cortex training cluster at Gigafactory Austin, which was a significant contributor to FSD advancement. And we continue to invest in training infrastructure at our Texas headquarters. So the training needs for Optimus humanoid robot are probably at least ultimately 10x what's needed for the car, at least to get to the full range of useful roles. You can say, like, how many different roles are there for a humanoid robot versus a car? A humanoid robot has probably 1,000 times more uses and more complex things than in a car. That doesn't mean the training scales by 1,000, but it's probably 10x.
Let me show you NVIDIA's expected growth rates over the next 3 years. According to Seeking Alpha, NVIDIA's revenue is expected to grow by around 52% this year to around 196 billion. This expected growth rate is much higher than Tesla and Palantir. Then over the next 2 years, NVIDIA's revenue growth is expected to decelerate more. In terms of EPS forecast, NVIDIA's EPS is expected to grow by around 51% this year. Then NVIDIA's EPS is expected to decelerate more over the next 2 years. At the time of making this video, I believe NVIDIA is undervalued. For example, NVIDIA's forward PE is expected to be around 29 by the end of this fiscal year, which will end in January 2026. This is very low for a mega cap AI semiconductor company that is expected to grow by around 51% this year. In fact, NVIDIA's growth is expected to be much higher than that of Palantir and Tesla this year, while its forward valuation is much lower. Next year, NVIDIA's forward PE is expected to be around 23. This is exceptionally low for a mega cap AI semiconductor company with the highest growth rate and the highest profitability in its industry. I believe these 4 P's suggest that NVIDIA is undervalued now, mainly because of the DeepSeek fear. Let me show you this investing app I'm developing with a friend. This is a preview. Our investing app will be out this year. The orange line represents NVIDIA's fair value over time. The blue line is NVIDIA's share price. The green line is analysts' average price target for NVIDIA. At the time making this video, NVIDIA's share price is still below its fair value, mainly because of the recent large sell-off caused by DeepSeek. I have been buying more NVIDIA shares over the past 12 months whenever NVIDIA dipped below its fair value line, so this strategy has worked very well for me. Now, based on our investing app, I believe NVIDIA's fair value should be around $150 per share. This suggests that NVIDIA stock is likely undervalued now. I also calculated NVIDIA's interest rate myself using this interest rate valuation model. If you want this interest rate valuation model, you can download it from my Patreon blog. The link is in the video description. Based on my interest value estimates here, I believe NVIDIA's current interest value should be around $140 per share. Just to compare, Morningstar has given NVIDIA a fair value of $130 per share. Based on all the valuation models I just showed you, I believe NVIDIA is slightly undervalued now. So will I buy NVIDIA stock? Yes, I will continue buying a lot more NVIDIA shares over time whenever NVIDIA is undervalued. The main reason is that I believe NVIDIA will continue dominating the AI server market for many years. We're still in the beginning of the AI revolution that will last for many years. The DeepSeek fear is overblown. The cost of computing and developing AI models will decrease substantially over time. This will make AI much cheaper and more accessible for everyone. This will increase AI usage and demand much more, which will lead to more AI investments and higher returns on investments or ROIs for AI companies. AI spending will continue to increase over the next several years because all the big techs in the US and the major AI companies in China are racing to develop the next frontier AI model. All the US big techs are racing to achieve AGI over the next several years. The AI arms race between the US and China will last for many years. Now, all these are only my opinions and my analysis that's based on my research. They are not financial advice. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.